If indeed there is either a pushing of the deadline, either kicking the can down the road or no deal, what would happen to the US market?
It'd be a big problem because we've seen in the past that when we get good news on trade, when there's optimism that something's going to get done, the markets have been rallying. And of course, when we get bad news, the markets take a real decline. I don't think, quite frankly, and I think this is important what I'm going to say, I don't think the trade issues are nearly as important as some of the other issues that face the U.S. economy. For example, the distinct possibility that we could have another shutdown in the federal government could have a much bigger impact on the stock market. And the reason for that is that it would have a much bigger impact, or a significant impact, on U.S. GDP, certainly for the first quarter, and therefore earnings. So I think if you put the two of them side by side, I think really the possibility of a shutdown is really very significant, a very significant problem or hurdle that faces the markets. That's the one that worries me the most.
How high is that chance, though, Hugh?
Pardon me?
How high is that chance of another shutdown or a prolonged shutdown?
That's a really good question. You know, the president talked about cooperation last night in his State of the Union message. And quite frankly, we got started again today, and all of a sudden we see things coming apart between the Democrats and the Republicans. I think, quite frankly, the chances are really, really high. He seems to be very intransigent, really stuck on this wall. I did hear the word compromise in his speech last night, but quite frankly, I think that would be very uncharacteristic. So there's got to be a compromise, and if he's unwilling to compromise on the wall, then I think the chances of a shutdown are very high. So let's just put it at, say, a 60% chance of a shutdown, and that would be a problem on a short-term basis for the U.S. stock market, because again, it might get U.S. GDP for the first quarter down around 1%. It's not going to be the worst of all possible worlds, but quite frankly, it's going to have a real damaging effect on not only first quarter GDP, but also earnings for the first quarter. And that matters a lot to investors. Matters a lot to me anyway.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.